Is Indiana a tax lien state? Well, welcome back, because I'm going to answer that question. Now, if you're just getting started, you're going to learn quickly that these states are not standardized. Each state will have its own rules and regulations. Now, I don't make those rules and regulations. The legislature does that all. So welcome back. On this episode, I'm going to cover, is Indiana a tax lien state? All right, well, I'm going to tell you a few things about it. First of all, the counties get together with the state and they make the rules that are going to take place. I don't make the rules. I just explain them to you guys. However, each of the states is going to do something different. I don't know what they're going to do, and you won't either. So you always have to read the rules of the auction. All right, so the state has the ability to create rules that they want. Then they send the rules down from the legislature down to the county. Texas is going to be different than Indiana. Indiana is going to be different than Pennsylvania. All right, so what I'm saying is you've got to get to know these rules. The law requires that all property owners pay property tax. All right, they're not going to get away with it. If they don't do something, they're going to have a big high penalty to pay, especially in a place like Indiana. All right, so a tax defaulted property, before they can lose the property, they'll go through a process. And the process is that they'll send a default notice, tell them they're in default, then they'll start creating tax lien certificates. And when they create those, they sell them to the public. You can buy those. If you buy a certificate, in the first 6 months, you could earn 10% on your certificate. In the subsequent months, in other words, months 7 through 12, you could earn 15% on that certificate. So think about what I just said. 10% in the first 6 months, and then 15% in the second 6 months. Now, I don't make the rules, but this is a perfect example. That's showing Lake County. All right, now Lake County is right on the south end of Lake Michigan. All right, that's where South Bend would be, for example. All right, they have 11,000, almost 12,000 tax lien certificates. So they have a live auction, or they can have it online. The point is, you could buy those. So this is a big population county. So large population counties can have a lot of tax lien certificates. Small population counties, they'll still have tax lien, but not quite so many. So what is Indiana? Indiana is a tax lien state. That means the state legislature made the rule that they sell tax lien certificates. All right, now this is a pretty outrageous interest rate that you can earn. And so the state is a benevolent state. Now they have 92 counties in the state. And when I say they're benevolent, they don't throw the property owner out. So everybody benefits with a tax lien auction. First, the county gets their money. And if you buy a tax lien, you're going to earn 10% first 6 months, 15% in the second 6 months, pretty good rates of return. Now, the big plus is they don't throw the owner out on the street, and I'll talk more about that in a minute, but you're getting the idea. So I'm answering the question, is Indiana a tax lien state? Absolutely it is. Now, the property owner ends up not paying taxes. They will have a levy placed against them. So the treasurer places a levy. Then after the levy, they try to collect the levy. If they can't collect it, they issue a tax lien. Now, all states don't do that. Other states, they levy the lien, they try to collect, and then they confiscate the property. So there's a world of difference between a tax lien certificate and a tax deed. All right, so the treasurers levy those taxes. If the people don't pay, the next step is they're going to issue a notice of default. Now, that might be multiple notices. It might be one delivered by the sheriff. It might be one that went just registered mail. But the notice of default will explain the consequences to that property owner. So if they don't pay, they're either going to have a tax lien certificate like in Indiana issued, or in other states, they're going to confiscate the property. All right, now I said Indiana sells tax lien certificates. To me, that means it's a benevolent state. Now, what do I mean by benevolent? They're going to allow the property owner to stay in the property during that whole default period. Now, the default period is a redemption period is about 1 year. So from the time that they issue that tax lien certificate, that homeowner can stay on the property. They don't throw them out. But other states that sell tax deeds do throw them out. Now, when the people come in to pay, they're going to have to come in, not only pay the tax that would due, but they're going to have to pay that outrageous interest rate. So that interest is accruing all the time. Now, if they don't make it in by the time 1 year is up, well, then the property is going to go to the tax lien collector, whoever bought the tax lien certificate. Now, I don't know what the rules are in all 49 states, but I can tell you it's very easy to find out. I can just go online and I can read on the state site, I can read on the county site, and I could go to the library and get the statute books, and it'll tell you that. So at the conclusion of a year in Indiana, what the county is going to do, the tax collector, is going to pick the property up, except the tax collector sold their taxes to the tax lien buyer. So now the tax lien buyer is driving this whole deal. All right, they're going to pick that property up, and they now own it. Now, they're not going to physically pick it up, but they're going to get the title to that property is what's going to happen. So the point is, this is a very, very lucrative business that anybody can make money at. Now, if you're one of those people just getting started in life, maybe you had a few curveballs thrown at you, everything hasn't worked out, this is a place you can get started over again, and you could be making money, significant money, right away. Now, you need some capital to get started, so you start saving up your money or you borrow it from someone else and share the profits with them. But there's plenty of these tax lien certificates. Now, I just showed you one county that had 11,000 certificates. Multiply that by 92 counties. I mean, you're talking about a lot of tax lien certificates. Now, in Indiana, 92 counties, but in about 20 of the counties have most of the population. So those big population counties, you can expect to find a lot of tax lien certificates. Now, why is the county selling these tax lien certificates? Well, the county needs money. Now, what do they need money for? Well, they got to pay the police. They got to pay the fire department. They got to pay for the school teachers. They have to pay to fix the roads. They have to pay the school system. In other words, the county has a lot of obligations. So they take the obligations, they figure out how much money they need, and then the property owners have to pay their fair share. So the property owners are paying property tax that the county gets, they pay their employees, and then they pay the firefighters, then they pay the police department, and so on. So you're getting the idea. So the county needs money, and they need it all the time. Now, how does all this work out? Well, basically, the legislature makes the rules. They send the rules down to the Board of Commissioners, and then the Board of Commissioners directs the treasurer and the tax collector. In other words, they authorize the tax collector, levy a tax, collect the tax. If you can't collect it, sell a tax lien certificate or take immediate possession of the property. Well, they sell a tax lien certificate in all the counties in Indiana. Other states don't do the same thing. All right, so keep in mind, if that tax lien certificate that you bought is not paid for, and it's not paid for in 1 year's time, then you're going to end up getting that property. Now, will there be rules that you have to follow? Yes, you can find all the rules on the county website if you want it there. You can go online and do that. You can buy the statute books. You can call the state. All of that's public knowledge. Everybody knows it. Nobody is trying to hide that information from you. But you see, the beauty of what we're talking about here is throughout the United States, people are allowed to own property. If you live in the United States, you're allowed to own a property. So you can do anything you want with it. You want to graze cattle on it. You want to build houses on it. You want to just have your own little farm on it. You can do anything you want with that property. But the one thing that you have to do is you have to pay property tax. So that's what this is all about. So we talk about tax lien certificates in Indiana. Other states will talk about tax deeds. A tax lien certificate means that the owner is going to stay in that property for a full year. You're not going to get possession of the property. I'm going to say that again. You don't get possession of that property until the people have fully defaulted and you've gone all the way through that redemption period. All right, so who benefits from all this? Well, the first benefit goes to the county. Why? Because you're going to buy the certificate. Now they have the money to pay the police and the fire department. The second benefit goes to the owner of the property because they don't get kicked out. They're not kicked out of the property. They're able to stay in that property. How good is that? So they're staying in the property. Now, if they stayed long enough, you're going to end up with the property. But I'm going to tell you, probably 90 or 95% of those people will come forward, pay the taxes, and then pay you all of that penalty. Now, those interest rates are just short of outrageous. Today's market on interest rates is like 1 or 2%. That's pretty darn low. But you're going to be able to earn 10% in the first 6 months and then 15% in the second 6 months. All right, so this is all property taxes. They've been around for hundreds of years. In the state of Indiana, they allow 1 year for the person to get their act together and pay the tax. Well, the person probably was sick. Who knows, maybe they had COVID. maybe they had a financial problem, maybe they just made a lot of bad decisions. But they got one whole year to make up their mistakes and come in and pay. If they don't come in and pay and you own the certificate, you're probably going to end up with that property. Now, here's the best deal. When you end up with that property, what's really going to happen is you're going to end up with a property at a huge discount. Over and above that, the mortgage is going to be wiped out. That means you're going to own a property free and clear. So you'd like to own a property free and clear for just paying the back taxes. Now, these auctions are all across the United States. When I say all across, I mean all across. There's 3,000 counties. There's over 1,400 municipalities. They're all separate taxing districts, and they all can sell property. So that means they'll either be tax liens or tax deeds. All right, the counties sell them, and also the municipalities sell them. All right, so from an investor standpoint, you got lots to cheer about if you decide to do this in Indiana. All right, now I'm going to kind of button this up in the next minute or two, but before I do, I want to tell you that they also sell commissioner sales in this state. All right, now commissioner sales are properties that are left over, nobody bid on, they've tried to sell a bunch of times. I don't spend a lot of time talking about commissioner sales for one reason only. I'm in the business of teaching people how to make money, and I want you to be able to make it. Either high interest rates on taxing certificates, or if you're going to get into the deeds, which is a commissioner sale, they're selling the deed. All right, if you're going to get into that, I wanted you to be able to make $20,000 or $25,000 if you're going to start risking big money. Okay, so I don't think you're going to make that kind of money on commissioner sale. So I don't talk a lot about them, but you can check into those. They'll tell you about them in the county websites. But they're going to have commissioner sale, and they sell these properties for less than pennies on the dollar, but they require a lot of repairs in most cases, and many times they're in poor locations. So the most important thing when buying a tax certificate or buying a tax deed is location, because you can fix a property, but you can't fix the location. All right, so I'm going to button it up for today. Before I go, I want you to know right below me, there's a free gift from Ted, and you want to take advantage of that. I don't know if you've already done it, but if you liked what you heard about today, how about liking the video? If you have questions, we're happy to answer those. Everybody that sends in a question, we send them a nice gift on the way back. So I'm going to button it up for now, but I'm going to tell you two things that you need to know about. The biggest mistakes at tax auctions, whether they're tax liens or tax deeds, biggest mistake is people don't look at the property. If they don't look at the property, what happens if it burned down? Now you own a burned down property. What happens if it's next to a chicken farm or a pig farm? I don't think you're going to like the smell. It's going to be hard to sell. All right, so always look at the property. Boots on the ground, feet on the ground makes a difference. If you can't do that, get someone else to go look at it for you. All right, second big problem is people bid and they don't know what they're bidding on. So they might not have looked at it, but if you don't know what you're bidding on and know what you're going to sell it for with a tax deed, now you got a real problem. So tax liens are the safest business. Why? Because you give your money to the government, you're going to get a check back from the government. If you don't get paid, you get the property without a mortgage. I'm Ted Thomas.